Good afternoon to you all. Good afternoon to our audience today and to our esteemed speakers. I hope you all will, wherever you are dialing in from. And for those that we have beyond our jurisdiction, good morning or good evening, whatever time zone you might be in. It's so good to have you all. And without further ado, I'll open this session formally. We are starting at exactly 2 minutes past 2 p.m. and we'll have this session run for 2 hours maximum as planned. And I hope we'll have covered everything we intend to cover or hear from our speakers. Yes, so to begin with, my name is Rachel Kembabazi, a principal associate at Signum Advocates. I must make a quick change or modification to the flyer that went out. There's a bit of a mistake there on my designation as managing partner Signum Advocates, but to clarify, I'm a principal associate and I happen to have the managing partner in session today, and perhaps that's what could have caused the overrun. Yes, but nevertheless, it's so good to have you today, and I'll get straight into it. I'm very excited for this topic because as a finance practitioner myself from the legal world, I'm excited for this topic, financing the future. Quite interesting. It's the in thing now. It's something we're hearing from time to time, and we cannot wait to hear it all. So allow me introduce my speakers this afternoon, and I will invite them to start us off as planned. Okay, so I will just maybe one ground rule. If you have any questions, please do let us know. There is a Q&A session or tab at the chat. You could just go right there, drop your question so that we can address it as and when you send it in. Alternatively, we'll have a Q&A after every speaker has taken on the session, and we'll be happy to answer any questions or clarify on anything that you might raise during this session. Yes, so I will start off with the first speaker today. That is Anne Kadima, who's with us in session. Anne, you're very welcome. Yes, I hope you can all see her.
Thank you, Rachel.
Yes, Anne is a partner at, I beg your pardon. Yes, Anne is joining us from Oraro and Company Advocates, where she's a partner in the dispute resolution practice. She has over 8 years of experience. She has represented local and international clients in banking and commercial litigation, defamation, employment and labor disputes, and shareholder disputes. Her expertise spans various sectors, including financial services and manufacturing and industries, and was also part of the team that represented a leading commercial bank against 3 separate class actions in the employment and labor relations court, advocating for the calculation of terminal benefits arising from voluntary early retirement taken by the claimants. She's been recognized for her strategic approach and deep understanding of dispute resolution, and she's very valued by her clients for her diligence, responsiveness, and ability to simplify complex legal matters. We are very delighted to have Anne today. I cannot wait to learn from her, and I will let Anne take us away this minute. And you're welcome, and you'll start us off in this very interesting subject that we are starting to learn today. We are very eager to know what it is, to understand what fintech is about for those that may not have an idea, and to also know where we are perhaps in the legal landscape, business landscape, and maybe your experiences or how much you've interacted with this. And you're welcome.
Thank you so much, Rachel. And I'm happy to be here this afternoon, and good afternoon to all people attending this webinar today. I'll just take a moment to share my screen where I have a few things. I believe you can all see my screen. Thank you. I'll just take us through the impact. I'll take us through the introductory aspects of what is fintech, what has driven the rise of fintech, and the use of digital financial services, and how they are shaping business models, both in the national space and also in international transactions. So let us start off with just a few introductory comments. So when we're speaking about the use of fintech and how it has revolutionized the global financial sector, we will be looking at what this fintech is. We'll be looking at what digital financial services are and what has driven the rise of the use of fintech in financial services. So let's just start with a few quick definitions. Fintech simply is just the use of technology to deliver or in the delivery of financial services. And it might seem like a complicated word or a complicated thing, but it really isn't. It's just the incorporation of technology into the delivery of financial services. If I was to make it a very simple, give it a very simple interpretation. While digital financial services are any financial services that rely on digital technology for their delivery and use by customers. So if you're interacting with a digital...
And I think we lost you right there.
I'm sorry about that. Can you hear me now?
Yes, I can hear you now.
Thank you. So I was just talking about what digital financial services are. And I was just explaining that digital financial services are any financial service that will rely on digital technology for its delivery and use. So if you have any platform, any financial platform that allows you to use it on a digital platform, then that actually is a digital payment platform or can be termed or grouped as a digital financial service. So we have seen the rise of digital financial services over the past few years, both in Kenya, I would say East Africa, and the world in general. And we want to look at some of these factors. We want to just look at some of these factors that have contributed to the rise of digital financial services. And before I do that, I just want to let's look at some examples, because I might have just used some terminologies to explain these things, and examples I always feel like examples bring things into perspective. So can we look at some of the examples of digital financial services? These are things that include mobile banking. So in Kenya, I'm using examples of Kenya, we have apps like KCB app by KCB Bank, Easy app by Equity Bank. We have the StanChat app also. We have, I think, I would say 90% of the banks in Kenya have a mobile banking platform that their customers can use as and when they would like to use it to access most, if not all, of the banking services that traditionally one would have to walk into a banking hall to do. For example, you can now make bank transfers from either locally or internationally from one customer or one person to the next using your banking application. And even some have integrated to other payment systems such as the M-Pesa that we have in Kenya, which is also a mobile money system, which we will discuss shortly. So we do have mobile money, and which was introduced into the Kenyan market by Safaricom by its product M-Pesa in the year 2007. And just a few days ago, it was actually M-Pesa was celebrating its 18th birthday. It has been with us in the market for 18 years, and I know a lot of you have heard a lot about M-Pesa and why it's one of the driving platforms when it comes to mobile money. It's been very successful, both in the Kenyan market We will look at things like and other examples of digital financial services are things like digital wallets. And here you're thinking of an application, a digital application that will help you store your payment information, thus eliminating the actual need of physical wallets. Think of what you used to carry in your wallet, your money, your bank cards to make payments. Now these things are now they're digital wallets. For example, Apple Pay, you have your Google Wallet, your Samsung Wallet, your PayPals, and the like, that allow you to have all this information in one place. And now you don't need to walk around with 1,001 cards and a bundle of cash. We have also services that go into the lending sphere, for example, peer-to-peer lending applications that allow individuals to lend directly from each other, thereby bypassing the traditional financial institutions, borrowing and lending through the traditional financial institutions. And we also have examples of platforms such as Upstart, Lending Club, Kiva, that actually cover this space. And I was just trying to bring to perspective so that as we're discussing what has brought the rise of these digital financial services, we have something in our mind that is playing as we discuss these concepts going forward. So you'd not be looking at it as something very foreign. You just need to realize it's something that you're actually interacting with probably on a daily, if you're thinking of your mobile banking app, or if you have mobile money platforms in your country, such as M-Pesa or Airtel Money, or whichever platform you have, or you also interact with platforms such as PayPal, Wise, to transfer money from one person to another, even across jurisdictions. These are the things we are looking into. Or if you're using borrowing or lending services that are digital, such as the ones we have just discussed, these are the things we are talking about, and how these services have penetrated the business environment, and whether they've been the good they have done, the bad they have done, and definitely we'll also be discussing the challenges later on in the webinar. Some of my colleagues will also be discussing the challenges that have come about from these integration of these services. So what are the key trends that are driving the rise in digital financial services? One of the main things that we have seen that has helped in the rise of digital financial services, especially in Kenya and I think worldwide, is the penetration of internet connectivity and the use of mobile phones, and in particular the smartphones. So as we have discussed, fintech is where financial services and technology merge, and digital financial services have to happen on a digital platform. So to be able to access these services, there's need for an internet connectivity, and there's need for devices that allow you to connect to this internet and access these applications and other means for other means that you need to interact with these digital financial services. So the penetration of the internet and the use and penetration of also and access to smartphones has been able to really drive this trend of the rise of digital financial services. The second thing that we are seeing that is really driving this agenda is the change in customer expectations. The banks, the financial institutions are seeing that their customers more likely right now than it was before are the younger generation, or what we call who like to call themselves the Gen Z in Kenya. The young generation are the ones accessing these financial services, and young generation are always into or really prefer what is seen as the efficient, I don't want to call it the easy way, the efficient way of doing things. And this is, they want to be able to do their banking transactions without having to visit the banking hall. They want to be able to take loans without having to go and filling the myriad of paperwork and going to the bank and asking them for loans. They want new innovative ways of doing things and doing business and running with their finances. So this expectation, this change in consumer expectations has really driven the growth of or the rise of digital financial services in the economy. People want to see, or people want the providers of these financial services to be up and forward with the trends. They want to be able to use. I'm sure right now it would be very hard to convince our Gen Z to open an account with you if you haven't incorporated some of these services within the service that you're offering. So that's the other thing that has really driven the rise of digital financial services in the market. The third thing is the regulatory developments or pressure. So worldwide, we are seeing governments and regulatory bodies adapting to the evolving fintech landscape by introducing regulations that promote competition, protection of consumers, and enhanced financial stability. So sometimes to be able to meet these demands, these regulatory demands and developments and pressures, there is need to integrate systems that will allow you to do this. For example, if we are talking about creating a more secure system, they might be need to integrate technology where we're using things like fingerprints or facial recognition to be able to access services. And with that need, we're seeing that financial institutions, more likely than not, are adopting these digital technologies to be able to improve the service delivery and to be able to meet the regulatory requirements that are being introduced. There's also the adoption of blockchain and cryptocurrencies that has come up, and we are seeing that these are currencies that are only traded on the digital space. So to be able to get into and get a slice of this cake, you would have to be able to adopt to the changing times and be able to have the service that is required to be able to do such things. So there's also that, and there's again the rise in artificial intelligence that has brought solutions that manage a risk, can be able to detect fraud, give personalized advisory services, and all this. So financial institutions again are forced to apply and adopt AI into their operations to just to help with the efficiency and to improve the running of the operations. I will now quickly talk of the impact of fintech on the global financial sector. As we've seen, we've been able to discuss what is fintech and these digital services that are offered in this financial space, and we've been able to look at the different examples that we have, and in the different spaces. It's just not in the banking space. It's in the mobile banking space. It's in the lending space. It's even in the financial advisory space. It's really integrated into a lot of the financial services that we're seeing in the market. So what's the impact then of this integration of fintech on the global financial sector? One of the biggest impacts we have seen is the increased financial inclusion. And if we're to give the example of just the use of M-Pesa in Kenya, it really was able to bring most of that unbanked population into a sort of or a form of banking solution, where through the M-Pesa application, they're able to not only send money or receive money, they're also able to save money and now are able to take out loans through the buy, or I would call it an off product of M-Pesa called M-Shwari, where someone is able to save, like they would in the traditional bank, and they're able to take out loans against those savings. And so you can see that those people who traditionally did not have that access to the banking space are now being able to have access. And now, of course, this brings about the issue, the whole financial inclusion aspect. There's also the transformation of the traditional banking models. As we've said, now people are able to bank even not just in the traditional bank as we know it. People are able to bank in other digital services such as mobile banking applications or mobile payment systems. So we have seen that this has really changed that traditional banking model from who can save and save where. And also when we go into things like lending, it has also changed that right now you don't need to you can get loans from many different places and not just the traditional bank as we know it. We can get it from, as I've talked about, the small scale loans from applications such as the M-Shwari that is run by Safaricom through M-Pesa. We have seen lending platforms in Kenya such as Tala and Branch and many other lending platforms that have come to the space and are able to give people loans at a click of a button. I would say a few minutes application and your loan has been approved and your money disbursed. The problems that has been brought by this, again, that's a discussion to be had. We have also improved security, and as I've talked about, the integration of biometric systems into these digital financial services or platforms has really enhanced that security aspect of digital finances as we traditionally knew it. Of course, we have the enhanced efficiency and cost reduction. These solutions have helped reduce operational cost and increase transaction speeds. If people don't need to go into a banking hall, we don't need to have banking halls all over the country. People just need to have the application, log in, and be able to do their banking from there. And obviously, the ripple effect of this you'll see is reduced operational costs. Maybe you don't need to have branches all over. There's increased transaction speeds. You're able to quickly do a transaction that probably would take you 1 hour, 2 hours to go into the bank, wait in line, fill in a form, submit it for it to go through the processes before the transaction has been done. You've done it within a few minutes or a few seconds at the comfort of your home, on your laptop or on your mobile device. We also are talking about decentralized finance, where this the use of fintech has been able to do away with that intermediary use of intermediaries in some of these transactions, and people are able to do it directly and in a timely manner. And we've also seen smart contracts that facilitate lending and borrowing in a decentralized manner, thereby disrupting the conventional, as we've said, the traditional sort of banking or financing that people are looking at. As I talk about this, and it really just goes into, if you look at this impact, it really influences the discussion that I want to have next on the influence of these digital financial services on international business models. So when we have all these things running in our mind, the accessibility, inclusivity, the improved security, the use of the security features that are able to be done through the integration of AI and all these other digital things in our financial services, it is easy to be able to see what kind of influence then these digital financial services have on international business models. And one of the most obvious ones is the simplification or the efficiency that has been made on making of cross-border payments or remittances. Now, again, with a click of a button, I can be able to pay somebody in Uganda or Tanzania or in the US. I don't need to be able to go through the traditional long methods that people used to have to go through then. Through digital payment service providers such as PayPal, Wise, think of all these other applications that you can use. You can transfer money to someone even in another country, as easy as it is to transfer money to someone sitting right next to you. So it has really simplified these cross-border payments. And of course, the effect of that is to improve or increase cross-border transactions, because it's now easy to really get into trade when things such as payment has been problems of processing and payment remittance has been taken care of by the inclusion or the adoption of some of these digital payment services. We also have the automation of many of these trade finance services, and which has now again reduced the paperwork necessary and increased efficiency. As we've seen with things like smart contracts, everything is going digital, everything is being done online and in real time. So it's again, we're really improving efficiency and even visibility and transparency in these transactions, because you're able to see everything in real time, you're able to track everything in real time, and you're able to do everything in the comfort of wherever you are in the world. I think that must have been a bit of a mistake. There's also the issue, the third influence we've seen is the issue of when we come to lending, and this has also become, it has made lending not just be something that you could do just in your country or in your locality. We've seen now it has also increased the accessibility to finance across borders. It has really opened that up through the use and integration of these digital financial services. I don't want to go more past where I am, because I risk talking too much and getting into my my co-presenters' topics. So I think for now I'll leave it at that. I'll leave it at that, and in case we have any questions, maybe Rachel can be able to guide on how that will be done.
Okay, thank you very much, Anne. I think our stage has been set, and I'll take any questions that our attendees might have at this point. And again, as I said, if you have any questions, please do let us know. Do send a message on the chat, so we can take any questions that you might have. You can put up your hand and I'll be able to just get to you. Yes, and if then that was actually quite insightful, Anne. I think with the next phase of this session, I'm excited to hear what's coming from the regulatory landscape, knowing that we are in an innovation era where I think there's been lots of changes in transactions, in global transactions generally. We're looking at digital currencies, we're looking at cryptocurrencies, we're looking at stablecoin, different modes of transacting literally in the finance space. And we're wondering, because I think as a legal practitioner, your role is majorly around regulation compliance. What happens? Because there seems to be a lot of cross-border transaction speeds vis-a-vis legal oversight or legal regulation. So I will then get to our next speaker that is going to take us through the regulatory frameworks and landscapes as they currently are. And I'll probably tackle more of those. I'm particularly excited about this because I can't wait to see what's happening in this area. So our next speaker will be Miss Winnie Awino. She's on call with us already. Miss Winnie, you're welcome. I'll just quickly introduce her and she'll take us right through this. So Winnie Awino is a dual qualified lawyer. She's admitted to practice law in Uganda and in New York. She's a member, of course, of the Uganda Law Society, the East African Law Society, and the New York Bar Association. Winnie is an experienced finance and technology services practitioner. Her practice covers corporate and technology services, advisory, and banking and finance mandates. She acts for various indigenous entities on their legal, regulatory, and transactional or business operating matters. She's also retained as legal counsel for multi-corporations, for whom she routinely provides corporate and strategic advisory and support relating to their operations in Uganda. As a partner and legal practitioner with S&L Advocates, DLA Piper Africa, she has over 14 years experience and she has provided valuable strategic risk management and regulatory compliance services over the years. She's a certified digital finance practitioner and we can't wait to hear from Winnie. Winnie, you're very welcome. Over to you now.
Thank you very much, Rachel. Hopefully you can see my screen.
Yes, we can see your screen now.
I'll just turn on the slideshow. I'm not sure if you're seeing a slideshow view.
Yes.
Okay,
Not
perfect.
yet.
Not yet.
I think I can show you, yes, still. Yes, perfect now.
Okay, thank you, Rachel. Thank you very much, Anne. I think Anne has given us an apt introduction to where we are in terms of financial services, not just in Africa, but I think globally. And I thought I would pick up from that particular area. So I just thought I'll give a brief of what my session will look like. I will have financial services, a snapshot of what it looks like across the globe, why we're talking about innovation, why it's important, and why there's so much, I would say, speak around regulatory focus, give you some global trends of what regulation looks like across the globe, and some recommendations for our regulators, because in our various markets, we're advisors to regulators, some of us are the regulators, and it would be good to know, what are best practices, what approaches can we take. And I think just in terms of starting us off, Rachel, I thought it's important for us to, just remind ourselves, most times when we talk about financial services, people are locked to bank tech, they think about banking services as we know them traditionally. But of course, with this evolution, we've had, I would say, so much of a change. And we do have what you'd call fintech. Again, it's really your financial services and supplemented by technology. And alongside that still comes your regular bank tech, which is, again, banking and non-banking services. Most times those two are looked at together. You do have insurance, which I think evolving. Anyone can tell now, you may get a ping on your phone, and you're being sold insurance through your computer or through your phone, and that is InsurTech. And then we have investments, which are really your capital markets, securities, and equity trading. A lot of, I think, our markets in Africa, you may find that fintech and bank tech are, regulated by the same regulator. And we'll see that later on. And then you have, of course, insurance, which is, I think, across the globe now, a bespoke service regulated by a different regulator, usually an insurance regulator. And then we have investments, which are your capital markets, securities exchange commissions, and the like. Of course, just setting the scene for this discussion is technologies are changing. Regulators are working hard to keep up to date with regulations. in many jurisdictions, you're seeing a split of, regulatory functions. A central bank might have to be split into two. You might have collaboration among the regulators. Basically, I think it's just a way of the regulator saying a lot is happening. What can we do both to protect the market, but also to be able to deliver services, for their different markets. In terms of technologies, I thought it's also important for us to look at what, when we talk about innovation, what are we talking about? And I know Anne touched, a bit on that, and I'll just supplement to say what you're seeing on the screen is really what is driving technologies in financial services. Whether it's blockchain, whether it's AI, whether it's automation, you're able to log into your banking app and be able to carry out a transaction without human interaction. Is it data that is being used either to credit score you, or data that is being used to provide, a service to you? Is it cryptocurrency? And I know that one is a touchy subject for our regulators in Africa, because in their minds, it's out there. It's not something that they're able to regulate as they would do for fiat money or money that sits in the central banks. Is it machine learning? A lot of that is repetitive learning, getting technology to maybe study customers and develop products that are relevant for customers. I just thought also we'll look at use cases, because many times when we hear innovation, people will think, okay, innovation is bad, but innovation is actually not as bad as some regulators make it seem, because it has helped us not just advance our goals as, whether it's a governmental goal, but also be able to meet niche needs of customers, whether they're customers in an urban area or customers in a rural setting who are not able to be, reached by your regular banking sector. So in terms of use cases, I just thought we'd have a snapshot of what goes on around the globe. And I'll give an example of India. India has implemented a system called Aadhaar, which is more or less like a joint biometric system. So you provide your biometrics once to a governmental, a specific governmental system, and over the course, whether you're going to Office B or FSD, all your biometrics are there. So it helps customers not just access services, but also reduces duplication among systems. Then also generally just competition in the market. Obviously, when there's one player, there's no push, to develop products for different customers. But when you see an increase in, say, regulatory space, for example, in Uganda, when we did have the National Payment Systems Framework, very many players entered the market. The kind of products that are being developed are products that we probably would not have seen, if we had one or two players in the market, because now they have to keep a competitive edge. They have to find, that niche client, establish products that are relevant for their customers. Also looking at new technologies. I mean, we no longer need to go with a ledger book to the bank and sign off, how much you're taking, how much is left in your bank wallet. But you're able to pay just from the touch of a phone. For others, you're just walking into a shop and walking out, and a product has been logged onto your Visa card. So those are some of the examples of innovation. Critical, of course, for regulators, and this is just, speaking to a couple across, the globe, is interoperability of systems. Most of us are hearing about sustainability and how we can get that to, be a resounding aspect in the systems, not just financially, but also in the other aspects of provision of services. And innovation has helped that you no longer need 6 people doing the same thing. If you have one person setting up infrastructure and then having the rest, connect to it, obviously at commercial arrangements, then you're not just being sustainable, but you're also enabling those entities just to reduce their capex. They're able to provide services to consumers at reduced rates, and overall, I think becomes a win-win for all. The other one, I think, is just customer experience. We've seen how innovation is. If you remember your Nokia, for some people in the call, needed to, it was just pressing buttons to call. But today you're able to do so much just from the touch of your phone. And all of this is happening because of innovation. Your providers are able to follow your trends, are able to understand what you need. The AI is reading where you are, and they're able to develop products and services that give you, a satisfying customer user experience. In terms of the cons, certainly, as we all know, there is nothing, every silver lining has a cloud. And many times you'll see that where innovation is coming, of course, that means companies are implementing, high-tech services. They are rising consumer costs. Every other day you open the newspaper and there is a cybersecurity issue, a data privacy issue. I think there was something just across in Kenya for data privacy. For regulators, the risk is market integrity. How do we trust these systems that are in place? We have some, I think, in Uganda who had licenses temporarily suspended, of course, until the regulator felt that what they were doing was trustworthy for the system. And then overall is, with all these technologies, you have system dependencies. Are we setting ourselves up for, a financial crisis? I think this is usually one of the issues that regulators face. So we'll talk about what, the regulatory focus is. Maybe I'll just start with the slide before. Is what kind of frameworks, form regulations across the globe. We have agencies that are either your central bank, as I said before, in some jurisdictions, you have a prudential regulatory authority who will deal with basically your financial systems, how is the, basically how is that system working and stability for the market overall. And then you'll have a niche institution that deals with market conduct, and which is your integrity of the system, your consumer protection. In some jurisdictions, they have a separate consumer protection agency, just handling those issues that relate to the public and how services are being delivered across. Then you'll have your insurance institutions. We already talked about that. And then globally as well, it's important for us to remember that none of these countries of ours, work in isolation. So we do have, for example, World Bank, which issues certain guidelines in terms of regulatory framework, whether it's to innovation. We have FATF, which deals with anti-money laundering. Then we have the Bank for International Settlements, which I think is critical for digital financial services and, is issuing guidelines, frameworks, policies. In terms of how the regulations are passed across, the different jurisdictions, you'll have your statutory law, which is really what, laws of Uganda, laws of Kenya, laws of England kind of situation. Then you'll have general policy frameworks, which are really just broad. And like I said, most of these are issued by the global institutions. They provide an overall framework of how regulators in different countries should behave, but also licensed entities. So we've seen that these have been, I think, key in ensuring that innovation does not, overrun the intention regulatory. Then we'll have guidelines and directives, and I think those ones are as and when a specific regulator feels the need to implement them. In terms of regulatory focus, as I said before, there are global trends. A lot of movies, can we adopt technology? The regulator is, on the other hand, pulling back and saying, okay, while we adopt, there are certain things that we need to be concerned about. So for the regulator, it's usually a case of risk and rewards. Can we regulate in a manner that doesn't overburden service providers, but also is able to ensure that customers are not only receiving the right services, but are also being protected in the manner of delivery of those services. So most times the focus is consumer protection, because, and that one I think just goes without saying, is the regulators out, whether it's in, prudential or insurance, are customers getting the right service? Are they being told the right things? Is the advertising over and above? Is their data, being protected in the manner that it should be protected? Secondly is financial inclusion. That's always a big, and especially for Africa, where, and maybe I'll go back to Uganda, we are growing in terms of, numbers and banked. But when you look at, say, insurance, we're maybe at about 5%, and yet the goal is, to enroll everybody. So while the regulators think of regulations, they are thinking, how can we get, you know, these people in the bracket of people accessing financial services. Overall, is trust for the system, because if there's no trust either for the regulations or for the services, then you know, you'll have, I would say, a market on a downward projection. Then we also have market stability and integrity. I kind of touched on that one early. You know, with all these systems and interconnected, you know, services, a key question for the regulator always is, am I exposed? Am I exposing, you know, my systems, my country to the issues that come with technology development? Today, we know that a lot of our mobile service providers have interlinked systems with the regulator, but this is just a move to ensure that the regulator is able to monitor transactions in real time and be able to take action, you know, as opposed to, you know, receiving a report, say, from a service provider to say we have had a breach. By the time the regulator comes to, you know, sort out this and this, there's obviously been exposure to the public. In terms of regulatory approaches, I thought it would also be important to see what's happening globally. So some regulators adopt a wait and see approach. What that means is they will step back. They are passive. The regulator is there, is watching the market, but will only step in if there's an issue. And I think that worked very well in China, you know, a couple of years ago. The regulator took a wait and see approach. And for that one, we had the rise of Alibaba, WeChat Pay, Tencent. All of those were able to transform, not just from, you know, small tech companies, but they were able to, you know, transform into financial service providers. And currently, I think those are the big names that we're hearing. So the regulator did not choose to say, stop, this is not your area, but just ensure that they were working within a controlled, I would say, framework. The other example I think we can look at is maybe the East African example, which was where we had mobile money guidelines. We did have many mobile network operators providing digital financial services. And progressively, we have gone to a regulated environment, because the regulator has seen perhaps that the risks, you know, have grown, and therefore there's direction to take in terms of regulation. The other one is a whack-a-mole. Maybe perhaps what I can talk about in the wait and see approach, the risk there is that, you know, a regulator will have to play catch up. And by the time the regulator comes, you know, there've been, you know, losses in the market financially. There've been Ponzi schemes. And I think Ponzi schemes, I think, are just global, whether it's in Uganda, Kenya, it's all over. Then we have the whack-a-mole approach, which is really a reactive approach. A regulator, this happens today, a new regulation will come up, you know, definitely not the best for the market, but some regulators have taken that approach because they feel, you know, trends are changing and they want to catch up with the trend. So they want to catch the issue as soon as it arises. Of course, such regulations are generally restrictive because a regulator has not, you know, foreseen in advance whether this could change or whether something happening currently is caused by X, Y, or Z. Then we have prospective. Not many jurisdictions take a prospective approach, which is, you know, preparing regulations ahead of the activities happening. Certainly, it would be good if regulators look at things like blockchain and AI and, you know, try and provide broad frameworks around these particular aspects. And then there's a hybrid stroke active approach, which I think is taken by many regulators across the globe, which is really where regulators, I cannot say descend into the market, but they try and engage, you know, the industry providers, engage the market, understand, you know, global trends, and then regulate around that particular, I'd say, scenario. In Uganda, in Nigeria, there is a sandbox approach, which is where a regulator allows you to test whether it's a product or a service within a controlled environment. You can roll it out to the public. And if, you know, it's one that fits the services that the regulator, you know, is comfortable with, there's impact, then a regulator can transition you to a full licensing regime. The other one is, again, just a snapshot of what regulatory framework is around. I've already talked about the case of Uganda. We came from guidelines. We went to a fully fledged regulatory framework, both for national payments, which is really your payment systems and payment service providers. And then similar thing for the insurance regulatory space. In Africa, and our cases that we're just looking at for purposes of this webinar is Kenya, Nigeria, South Africa. We have regulatory sandboxes. We've already made reference to that one. We have focus on digital finance. I think Anne already spoke about that, and M-Pesa. M-Pesa is a good example, not just in Uganda, but when you go out, it's a good example of how regulations have enabled, have supported innovation, and there has been impact in terms of services, but also the customers. Customers are able to save, they're able to get insurance. Basically, everything, in Kenya would be running on a digital platform because the regulations were supportive. We've also seen in other jurisdictions, in order to keep up with innovation, regulators have split in terms of what they can do. South Africa, they've had to have a prudential regulator really dealing with financial institutions, the system, and then coming to have a market conduct, regulator to ensure that the restrictions that would generally apply to financial institutions are, relaxed for, I would say, less regulated entities, but that still enables them to provide services and achieve the goals of the regulator. We are seeing regulations across Africa focusing on emerging issues, data, cybersecurity, and I think this is one that is not going to stop. In Asia, we've seen the regulatory approach there is innovative friendly, as I'd already given the example of China, is a wait and see approach. And rather than having, nimble, specific regulations, the regulators provide broad policies that allow the financial service providers to be able to perform. So you may have something that speaks about risk broadly, but it's not going to list for you, a whole checklist of what a risk framework needs to look like. Then we've talked about interoperability. They're encouraging that as an innovative solution in financial services because it's enabling services to scale, but also achieving the impact that regulators are looking for. In Europe, our test cases were UK and Australia. And for those, we're seeing, of course, some concerns around data transfer restrictions. As providers are allowed to innovate, they're requested to ensure that data of citizens of the EU is, and UK in this case, is kept within that country. Their regulations are quite strict around that. They also have permissive sandbox regimes. In fact, I think for the UK, it's probably the best, and it might be called Project Innovate. It's probably what they are using as a model in other countries, because not only are you able to maybe test as a regulatory sandbox, as I've explained, but you may be able to get data, that you can use for a service, or you're able to get into group discussions or even smaller group discussions about innovations and things that you can do as service providers or an industry to be able to, provide services. So the UK is actually a very good example of where innovation is being supported and enabled. And as I'd said, globally as well, there are a couple of entities that just give guidance around what you should do when you're doing in regulation. Allow innovation. It might be that you allow it on a small scale, test it, and then allow it to go, or use a case-by-case basis. So all of these, of course, for FATF, the key thing is as you innovate, the key concerns for anti-money laundering must always be, kept in check. Certainly, the demographics, as we know, will always drive what technology and innovations, look like. In terms of what an ideal face of regulation looks like, I just thought would provide a snapshot across what the recommendations are globally, but what also is seen to be working in certain jurisdictions. Key to note is there's no one size that fits all. where you have overly descriptive rules is where then you have challenges, because then your providers are facing high compliance costs. Your providers are then passing on those costs to your customers. One for regulation is innovate for gap areas. Is while regulators allow people to innovate, they shouldn't allow people to innovate in the same area, because then you're not achieving, whether it's an industry goal or a national goal. Ensure that providers, say, okay, this is where there's a gap area. You want to innovate, this is where I'll allow you to, provide your services. The other thing is facilitating engagement between different regulators. Capital markets may be wanting to go digital, and maybe the banking regulator is saying, we wait. But if they have roundtable discussions, not just domestically, but even internationally, to be able to see, what works and what doesn't work, therein lies, potential for innovation to deliver the rewards, as well as mitigate the risks. In terms of consumer protection, the guidelines globally are manage or balance your consumer protection vis-a-vis the burden that you're passing on to the service provider. And we've already seen that one and how it would work. The other is aligning with broader financial services framework. In Uganda, we all know our drive is financial inclusion. So regulators should specifically consider those innovations that, drive impact, that are going out there and providing services to the underbanked, those who actually need the services in Uganda. The other one is providing simple and modern, regulation. That means that it should be flexible, it should be progressive regulation. It should be regulation that allows, the regulator to still maybe come back and issue a directive, not very restrictive, but one that also doesn't, expose the market to negative effects of innovation. Key thing, obviously, is always consumer education. If the customers are informed, and this is generally where your consumer protection agency will come in, then you're able to innovate and still know that even if, product A, B, C, D is going to the market, the customers understand the risks. The customers are able to make informed decisions, and, you're still able to balance the growth vis-a-vis your protection for the market. And then lastly, of course, this one very specific for regulators is, as regulators, they also need to adopt technologies, because many times they'll fear to adopt because either they don't have the capabilities or they don't, know what to do. But within financial sector, there are engagements that are always had. If they're able to operate, in a regulatory environment where they have the tools to be able to supervise these entities, without traditional supervisory models, then I believe innovation is one that is able to, thrive in the market. And then also just as regulators enacting, technology that enables them also to perform not just their services, but enable to predict the trends. So they will have regulations, technologies that can help them see what the data, where the market is going to. And in that manner, they're able to regulate specifically for that area. So almost going back to the hybrid approach where they're studying the market, the data is telling them that cryptocurrency is being adopted, then the regulator moves to an approach of, regulating cryptocurrency and digital assets and all that. I just thought that's it from us. Thank you very much.
All right. Thank you very much, Winnie. That was quite insightful and much taken. Thank you very much. I don't know if our audience has any questions. We can take any questions that you might have for either Anne or Winnie just before we get into the second half of this session. If there are any questions, please feel free to put up your hand or just drop me a chat and I'll be able to take on the question. And if we do not, I will just go on to the next session. Thank you, Winnie, once again. If there are any questions for you, I'll come back to you. And yes, we'll just get to that. But this is very, very interesting discussion, by the way. I was actually just thinking that if the regulators are not catching up or adopting to what's happening, to the trends that are happening, at least compared to other international jurisdictions. What does this actually mean for us? And I think this would take us to David's session, where we are going to look at the challenges that are happening, because I understand that innovation is not meant to stifle. At least we should have effective financial regulation to enable innovation and to create a stable and fair playing field, especially where trust, transparency, and growth can thrive amidst the innovative trends. So I will just go to David, and David should be able to tell us what challenges we are seeing in the across the board, and then he can also tell us probably how to deal with them or what they're already doing in Rwanda. So David, you're welcome. I will just quickly introduce you to our audience so they get to know who you are, and you'll get to it. Yes, so ladies and gentlemen, David is a Chief Associate at K Solutions and Partners, ALN Rwanda, and he's ranked as a rising star by IFLR. That's in 2024. He's a general business law practitioner with specialization in corporate and commercial law practice, banking law and finance, investments, and M&S. And David is also a member of the Rwanda Bar Association and East Africa Law Society. He's currently a member of International Compliance Association, the Chartered Institute of Arbitrators, and Employment Law Alliance. David, you're welcome, and over to you.
Thank you, Rachel. Good afternoon, everyone. I'm building on what Anne and Winnie have discussed to look at the challenges that the fintech services are facing on the market. But for us to understand that, it is important that we look at who are main consumers targeted by fintech, to who fintech services primarily designed for. So the primary aim of fintech services is to achieve financial inclusion. So we know that our statistics show that as of 2024, 60% of sub-Saharan African were underbanked or unbanked at all. So with that, and for the society to develop, to achieve economic and social development, we need financial inclusion so that no one is left behind. So for us to understand the challenges that the fintech services are facing, it is important that we take note of that, who are primarily end consumers of the services. Of course, there are some other services that are not meant to directly interact with the end consumer, like enablers, but they are also, we are focusing on fintech services that are interact with end consumers that are meant to achieve that financial inclusion we are aiming for, or we want. So, and that is achieved thanks to the rapidly growing population, African population that is exposed to technology. You know, there is an exposure of people exposed to mobile phones using digital devices. Now they can make payments, they can wallets, but it is good to see now, given the nature of the transactions or the financial, fintech services, we will see that some of challenges are arising from the nature of the services themselves. But maybe there are some other general challenges, like what my previous speakers have discussed, like inadequate regulations or lack of support. Looking at fintech services, those are innovators. Some of them are startups. So they need really a supportive environment that is enabling them to launch their innovations on the financial market. So lack of inadequate regulations or lack of support on the market is one of the main challenges, and also lack of standardized fintech licensing. We see that we have different regulators when it comes to fintech industry. But maybe, as Rachel said, that I'll be giving you examples of how Rwanda is doing now. With in fintech strategy, Rwanda is aiming at standardizing fintech licensing process to 3 to 4 months within the next 5 years. That is from 2024 to 2029. 5 years fintech strategy. So, but other than that, lack of standardized fintech licensing is a general a challenge in our jurisdictions, and also there are concerns around consumer protection, personal data protection, financial integrity, and economic stability. Challenges. We'll focus mainly on the legal challenges, and those are in two categories. We have regulatory challenges, and we also have, as I discussed earlier, we have challenges that are arising from the nature of industry or sector itself. I mean, fintech services, because maybe, for example, if you can look at areas of concentration of fintech services, they are in payments, clearing and settlements, deposit, lending, saving, insurance, capital raising. But those are the main areas of concentration. But there are other opportunities like insurance tech, wealth tech, leg tech, which we have said that, we have seen that our regulators also lack some technology that would enable them to control the fintech. Also data analytic, but it is looking at the areas of concentration. We see that apart from the regulatory challenges, there are also challenges that are arising from the nature of transactions themselves. So as I said, regulatory challenges, the one and most important, even though all of them are really challenges, but lack of regulation is a main challenge. I think Winnie has discussed that some of regulators are not taking proactive action and put regulations in place. So they are in our jurisdictions. Some of our jurisdictions don't have regulations or laws specifically dealing with or regulating fintech services. For example, if we talk about payment services or remittance, not all our regulators have those regulations in place. So lack of regulation, it is the first challenge that faces the fintech service providers face, and when it comes to innovations and launching their services on the market. And we know that given the sensibility of the financial market, sometimes what is not regulated on the financial market and it interacts with consumers and it involves payments or money of consumers, it tends to be not allowed. Maybe it's not provided anywhere that it is prohibited, but when it is not regulated, regulators tend to stay back and sometimes issue warnings to the public. And when the regulator says, we are not regulating this, so we are discouraging people from engaging or dealing with in those services, it is really a challenge for any investor in fintech industry, I would call it industry, to launch their innovation, their product or their services on the market, knowing that they are not backed, they are not encouraged by the regulations, by the regulator, For example, we have seen, like in Rwanda, there are times when the Central Bank of Rwanda is the regulator of financial sector, was issuing some warning to the public that, you know, dealing in with Bitcoins and everything, they should do it at their own risk, and because there is no regulations. So given the sensitivity of financial sector, it is really not easy for the investor to take risk and bring their investment or their money or their innovation to the sector on market in that respect, in that jurisdiction. And even the consumers, what we believe, I mean, we listen to our regulators. When a regulator says we don't have regulations on this service yet, or then the consumers will tend to stay back and say, no, we are not engaging with these people because of uncertainty, because they are not sure of what is going to happen with their money. So no one, either investor or consumers, no one is willing to take risk on a market where there is no regulations. So that lack of clear guidance or regulations when it comes to some fintech services or fintech solutions that will be useful on the market is really a hindrance to the launching of innovation or to emerging of innovation on the market. What should be done? Our regulator should maybe take risk or accept to deal with some risks, and of course with having some layers of protection, consumers protection in the market, but give a chance to innovations, to new, innovators to launch their fintech services on the market. That is the first challenge when it comes to regulatory or legal challenges concerning the regulatory framework. But also there is even in jurisdiction where we have regulations, you find that they are generalized. Like it's a regulation on payments, regulation on remittance, regulation on savings or lending, but it is really general for the entire financial sector. And some of licensing requirements do not really apply exactly to fintech services dealing with people in rural areas or remote areas. And the modalities, when you are launching your innovation, it is new. Actually, that is why it's need further. A bit of a chance to emerge on the market and some protection, because it is new. When you expose it to general requirements, and it is an innovation, then it may not have a chance to grow on the market, or to, like when you're asking, you must have this minimum capital requirement, you must comply with this before we allow you to operate on our market. Yet it is an innovation. It is something that has never been tested before, and you are exposing it to the same regulations that are operating on the financial market. Then it is really not helping the innovators or startups or whoever is coming up with a solution, a financial solution. So, and when they have to comply with already existing regulation, that means they are exposed to the same fault, the same administrative sanctions like any other operator on the market. Yet their product or their service, whatever they are launching on the market, has never been used before, has never been tested before. So they need specific regulations, at least allowing them to launch the innovation on the market, to let it be tested, maybe before they can be subject to already existing regulations, though even some of those existing regulations may not apply to fintech services, given their nature, as we will see. So as There is also a challenge of multiple regulators. We have many regulators when it comes to such sectors. Financial market, financial sector has its own regulator, capital markets. Like in Rwanda, we have also, because of technology, when it comes to tech, fintech, it is finance using technology. So that element of technology will bring in another regulator, with Rwanda Utility Regulatory Authority, RURA. So there are also competition authorities, there's data protection authorities. You end up, that innovation is exposed to more than one regulators, and with different regulations, with different requirements or licensing requirements or authorization requirements, and some of them in our jurisdictions, in our countries, don't harmonize their way of doing. Maybe to mitigate that challenge, an example of Rwanda. Rwanda has established a one-stop center operating in Rwanda Development Board, where you can go and have all your application submitted from the same place, and they're processed and you are licensed. So those dealing with multiple regulators, you have an innovation, you want to test it on the market, you want to launch it on the market, is really a challenge. So if the harmonization of the regulations, or at least licensing requirements, that would ease the process and facilitate the innovators in fintech, providing fintech services. We have also seen from previous speakers notion about sandboxes. So some of our countries have regulatory sandboxes that they provide guidelines, but not all of them. Like in Rwanda, we have one, but you may find that one regulator among the many we discussed above have a regulatory sandbox, but another doesn't have. So somewhere you have a safe space where you can launch your innovation safely without complying with all existing requirements, but another regulator doesn't have. Even where they have, a few of us, our jurisdiction have regulatory sandboxes, and the effectiveness, some of them have not been useful. Maybe they don't have those cohorts applications to use. So another point is the reactivity of our regulators. They tend to react on an event that has occurred. So that is an issue, because you are launching an innovation on the market, but there is no regulation, and the regulator will wait and see, and they will react when something happens. So lack of regulation, lack of sandboxes, and if anything happens, the regulator will come later. So that is a regulatory challenge. And but we know that regulators normally come when an event happened, like 2008 financial crisis. After that, many regulators come to stabilize the market. So it tends to be reactive most of the times. So evolving regulation is another challenge. Even where we have regulations, given the nature of the financial market, they are changing every day. But that is understandable. We expect regulations on the financial market to keep changing, because they're influenced by the nature of the market and the nature of the industry itself. Technology evolving every day, and the regulator, to be effective, will have to move with the technology, because they are regulating the fintech. So they move with technology. So more they need to, the result of that will be evolving regulation, and there is also a challenge when it comes to consumer protection. We have some of our countries don't have consumer protection law, financial service consumer protection law. Even those who have a consumer protection like Rwanda, they are for everyone at the financial sector. but some of the key provisions of those requirements may not apply when it comes to someone who is using their mobile phone and just following the prompt and making a payment or applying for a loan instantly. So those instant transactions, we have smart contracts. You end up entering into a contract just by clicking on your phone. Yet some of those financial service consumer protection laws say that you have to provide a written contract to the consumer. They have to review. There is also the period for cooling off. There's a period for cooling off, and that will not apply in case of instant transaction. The transaction has already happened, and the contract has already been entered to. That are existing are not facilitating the fintech services. Then when we look at private data protection, that person in remote areas, and remember that as we have seen when I was introducing, fintech services are meant to cater for, for financial in remote areas who are underbanked or services. So those people, some of them, by the way, the main challenge, another challenge that the fintech services face is illiteracy, financial literacy and digital illiteracy. So you're asking someone to give consent. Sometimes they don't even understand the consent they are giving, or as far as their privacy and data protection is concerned. They just press to get a loan, to pay, or to get another financial services enabled by the fintech. So it is really a challenge when it comes to our laws, because they have to cater for needs of consumers, fintech service consumers, specifically looking at the nature of the services, who are consumers, where they are, their level of understanding, because someone is entering into a contract. Some of us, even those generally, not everyone reads terms and conditions when they are paid. They are subscribing to something, or they are paying their service. They just want to pay a service. If you want to pay for your Uber, any delivery or something, you just want to get the service. So getting time to read your terms and conditions, privacy policies, not everyone does that. So it is a really challenge that has to, maybe our law should be, should have laws that bear in mind or cater for the end user of fintech services, who may not even know what giving consent for the collection and storage of distribution of their data means. So those are regulatory challenges and challenges that arise from the nature of the services, fintech services. But also there is cross-border issues, like an innovator is in Kenya, is in Uganda, wants to launch their innovation in Rwanda. They are going through the application process in each jurisdiction. There should be a needs for those innovators. Rwanda has achieved something I think is important, which is licensed passporting system. If you attended the FinTech Forum this February in Rwanda, it was launched, maybe you are aware of that, between Rwanda and Ghana, where there will be licensed passporting system, where if you have applied in Ghana or in Rwanda, if you go to another country, you will be allowed to launch or to try your innovation on another market without going through licensing again. So basically, those are main legal challenges we have. Our regulations and given the nature of the transaction, some of our laws generalize, the laws don't really apply to the nature of instant transactions and fintech services. So I will wrap up here. See, my time is over. Maybe we address other issues.
Thank you very much, David, and thank you for the great presentation. I sincerely apologize that we do not have as much time. I wish we had more than this, so that we can take as much time for the audience to benefit more. But at this point, I see that we have two questions. There's one from Louis Dizito. He's putting his hand up. I will take his question and I'll get to our next question that was dropped in the Q&A. Louis, can unmute and ask your question. Louis, I don't know if you can hear us.
Can
Okay,
you?
yes, we can hear you.
Thank you. Okay, I'm coming from a background. My questions are three, but the last question, the last one might come off as more of a concern, and I'm going to begin with my concern before I go to the questions. David, you spoke, and this is a common theme around the East African regulatory landscape: fragmented regulation. Now, I'm coming from a background of having drafted a private members bill to streamline, well, capital markets in this country, but I've seen the I've seen the difficulty. Now, I think most East African regulators should push for, rather, or even the law societies in those countries should push for something called the Twin Peaks model of financial regulation. In Twin Peaks, this is not something I've invented out of my imagination. We have Twin Peaks in South Africa, we have Twin Peaks in Netherlands, we have Twin Peaks in the UK, we have Twin Peaks in quite a number of countries. With Twin Peaks, what you do is that you get a conduct regulator whose job it is to regulate conduct. And now the prudential regulations, if they are really necessary, they go to the central bank. Why am I saying this? I have read the Virtual Asset Service Providers Bill, which is going to be tabled in Kenya next month. And they are fidgeting to find the room for a central bank. They are fidgeting to find a room for the Capital Markets Authority. I'll also give you an example. In Uganda here, I have a fintech client of mine who has a license from Capital Markets Authority, Bank of Uganda, Capital Markets Authority, like 4 regulators. Now he wants to get a license from UBRA. Now, you realize that tech is creating gray areas, like virtual assets. You find that if you're going to do as an STO, a security token offering, you'll find that there are payments things in there. So you'll be forced to get 3 licenses. For me, what I'm suggesting is, let's turn the capital markets into a department in the Financial Sector Authority, that can be created, turn the Insurance Regulatory Authority into another department in there. So if I'm to get a license, I get it from a Financial Sector Authority. And then if I have to abide by any capital requirements, then there's a prudential authority within the central bank, which can actually create those regulations. Now, as I conclude on this concern, there's a difference between capital markets regulation and banking regulation. In banking, how public funds are held is that when I put money in a bank, it's a liability. And therefore, those liabilities can only be safeguarded through minimum capital requirements, which is not the case in the capital markets. Now, the problem we have in East Africa is that we are subjecting capital requirements to securities regulation, which is not proper. And that is why most businesses are not even subjecting themselves to regulation. Now, that's a big concern. We can have a debate on that. Then lastly, when I look at virtual assets, which we call cryptocurrencies and stable coins, USDT, and all that stuff, I think we should take an approach which is coordinated as a region. Because if Kenya is to go at it alone like they're going, and then I saw Rwanda, they are coming up with their bill, and the virtual assets bill, and again, they're also struggling to find room for the central bank. They're also struggling to find room for the Capital Markets Authority. So I'm thinking that if we can have what David has just called passporting rights or passporting licensing, where you create some sort of framework where if we know each other as East Africa, we can actually push for that through our different regulators. And then very, very lastly, because I don't want to take time, I know there are more speakers ahead of me and other questions. I am concerned with the way we regulate private capital markets and public capital markets. Now, in East Africa, unfortunately, most of our funding is coming from the private capital markets, which are private equity, venture capital, that's private capital markets. Now, Kenya has infected the region with what I would call regulatory overreach, and that's what we are suffering from in this area. We are struggling to domesticate a lot of these private equity funds, the venture capital funds, even when government last year in Uganda came up with tax reliefs to exempt taxes on private capital markets, the venture capitals and the private equities. Now, why are we struggling in that area? It's because we are again subjecting prudential and financial and capital regulation on private capital markets. Because if it's private capital markets like venture capital, I'm going to give a term sheet to an investor. It's business between him and I. You get? And I'm also concerned on how the investment vehicles these private funds are taking on. Recently, Capital Markets Authority came up with partnership, I think, regulations to streamline it. There are issues there, though, but I think as a region, we should look at how to avoid one, regulatory overreach, so that we create more financing options that are domesticated, because as it stands, regulatory overreach is actually killing private capital markets, which, by the way, have bigger potential than even the public capital markets of raising capital through IPOs and all that stuff. So I'm thinking we should rethink, we should have an overhaul of how we think about regulation in the financial sector. In my view, it's a cake and it is not giving room for people to grow. Thank you.
Thank you very much, Louis. I think that I would say that was more of a contribution from you than a question. Thank you very much for your insight and the recommendations that we've picked from you. I don't know if David has any comments on that just before we get to the next speaker, or the next question rather.
Yes, thank you, Rachel, and thank you, Louis, for your contribution. And I will just comment on what you ended with. It's it's a cake that is not should be given to everyone to grow. But there's something with fintech. What they need is, maybe that is the role of the sandboxes. You are not giving up the security of the market. But you need new innovation. You need to go with this technology. You need to give chance to entrepreneurs and people with innovations when it comes to provision of financial services and making sure we achieve the inclusion we are looking for. At least if we could have sandboxes, that's my example. We could have sandboxes. We know that someone is trying under the framework of sandboxes, is trying their innovation for a given period of time. For example, the BNR, National Bank of Rwanda regulatory sandbox. You have 12 months to try your innovation. You have a specific group of people where it's a trial phase. So the financial market at large is not at risk. It's just you have 12 months to try your service, and when it is okay, when it passes the test, you can launch it to the market, to the financial market at large, and now apply for licenses for providing whichever financial service you are providing. So I think with the regulations meant to cater for the innovations, so that we give them a chance to try to emerge on the market with that level of uncertainty, but also with protection on the market. So I think that is the role of regulatory boxes. That's my comment on that, Rachel. Thank you.
Okay, thank you very much, David. And thank you, Louis, once again. I note that our time is fast spent. I just have one more question that I will request that you allow me to take questions after our last speaker, because I know we have a few minutes to close this session and I wouldn't want to prejudice one of our speakers. So with everything that we've had from this session in understanding what fintech is, the regulatory landscape and challenges and recommendations that we've actually had coming through, ultimately, we are the legal practitioners, advisors, transaction advisors, and so on and so forth that are going to deal with this, with the innovation integrating with technology and the finance world. So I'll then bring our next speaker that is going to tell us what we need to do as legal practitioners to advise businesses or entities that have currently onboarded these innovations and the technological nuances. And please allow me welcome Mr. Ian Tivwa. He's already with us on call. I'll quickly introduce him for those that may not know him, and he will take us away. So Ian is a managing partner at Signum Advocates. He heads the tax, banking, and finance practice areas, including Islamic finance. He's also the head of the corporate governance team at the firm. He's both a Ugandan and UK trained lawyer and has over 10 years of practice and experience. He's been nominated twice for the award of Partner of the Year at the Africa Legal Awards in 2020 and 2021, respectively. He's also recently recognized amongst the 75 highly regarded business lawyers in Uganda. He's a member of the East Africa Law Society and the Ugandan Law Society, and is a licensed insolvency practitioner in Uganda. Welcome with me, Ian. Ian, over to you.
Thank you, Rachel. Good afternoon, everybody. Speaking last has two advantages. One, I can say I concur with everyone who has spoken and I close my presentation, or I just give you a very abridged version of my presentation. Either of them can work. It also has disadvantages that everything that I've planned to say has been said. But I'll give you a little bit of a sneak peek on what, as a lawyer, we should be expecting in this fintech or evolving fintech regulatory space. I will not go into the detail because fintech has been defined. I'll look at the compliance and the risks, the legalese, business interest, and then the East African outlook. I will go straight. I think the previous speakers have defined what fintech is and what the role of digital assets are in the finance ecosystem. But I would probably emphasize that as lawyers, we're not going to be simply legal advisors, but we need to be strategic partners, ensuring compliance, enabling innovation, and assist to mitigate risks, and as well as protect business or stakeholder interests. I must add that simply being a lawyer in a business will not cut it. You must be part and parcel, an integral part of the business, and understand the business from end to end so that you can be able to play in the digital spaces. I will go to ask a very basic question that also boggles my mind. The law and commerce, which one comes first? I always call it the chicken and egg principle because you don't know whether it's the law or the commerce that comes first. But most times the law follows commerce. So when commerce changes, the law always plays catch up with the commerce. Right now, commerce is changing to digital, and we see we're emphasizing with Twin Peaks regulations and other things so that we can be able to catch up with the commerce that has come along. So as a lawyer, what do you look out for? I've broken it down into three aspects. One, the risk and compliance. Two, the legalese. And three, the business support. So risk and compliance, I think when you talked about regulatory compliance, and what you need to look out for, machine learning, AI, and the likes of things. Those are things that a lawyer should always think about when you're looking at different players in the digital space. Who regulates the digital space? Is it regulated? Is it a sandbox kind of like arrangement, or is it a fully fledged regulation like we have aspects of the national payment system as we have in Uganda? With, of course, digital assets comes a lot of fraud and anti-money laundering. You know for a fact that the thieves have learned how to hunt without breaking into your houses. So the offense of breaking and entering is seized to hold water, and now we have digital thefts. So fraud happens a lot, anti-money laundering happens a lot. What's a regulation, what's a law around that? How can you protect your clients against fraudulent acts? How can you defend your clients against fraudulent digital thieves who come into their businesses to disrupt? Also, what part of the compliance and the risk comes data protection and privacy. I think this is something that's up and coming in many jurisdictions where data mining or having people's personal data has become the order of the day. So how do you harness this data and how do you use this data later on for your own benefit? The lawyer needs to understand those dynamics and protect the client around collecting and data mining and the privacy of the data that's been collected. Consumer protection also been emphasized. These days, we don't look at just the business of making profit, but also your customers. How do you protect them from themselves, from the business, and from those around them? As a lawyer, you need to work out ways and means on how your client can provide legalese around consumer protection and how they can comply with the regulation that there is. In Uganda, I know we have consumer protection guidelines, I think by Bank of Uganda, that are a little bit detailed, and they can give you guidance on how the consumer should be protected. The other one is personal favorite, tax compliance. Again, with digital assets comes a little bit of tax regulation. Some people ignore this and focus more on the aspects of banking, on aspects of the digital business, but tax compliance, the taxman also coming to say this commerce is changing where people are not having brick and mortar, but making revenues or sourcing income from a jurisdiction. How can we harness some of these taxes? And the law in Uganda has also changed on taxation of digital assets. So as a lawyer, you need to be able to understand the risk and the compliance mechanism that can come up to mitigate or avert some of these risks that come in the business. The other portion that you need to look out for, the other portion you need to look out for is the legalese, what everyone looks out for a lawyer, which I don't think should be the primary focus, but these are things that give us our day-to-day bread. Contract negotiation, how do you negotiate a contract that is maybe software for a service or something part of a digital or a fintech organization? You need to appreciate and understand the workspace you're playing in so that you can be able to negotiate these intricacies or contractual clauses very well. User agreements, these are usually departments that use this particular digital assets. Maybe it's the IT department or the sales department, whatever it is. How do you craft the user agreements to make sure that the entity you represent or the person you represent are well protected against the different aspects of risk and compliance that I've mentioned earlier. T's and C's are also very important. Many of us don't like reading them, but these are part and parcel and very vital to aspects of digital business. Many times, even sending a generic email to people has been criminalized. Sourcing people's data been criminalized. So you need to have an understanding of what terms and conditions you should put, maybe for mobile app or for M-Pesa or for different payment systems. You need to know what the terms are and what conditions you can put so that you can protect your respective clients. Digital lenders also coming in handy. I know of an Islamic finance digital lender in Uganda, and it's interesting to look through and advise of their lending agreements and how their lending operates in the digital space. This is a little bit different because here someone clicks and obtains a loan even without having the normal KYC that you see in a financial institution. So you need to acquiesce with how those different agreements for digital lenders also apply. The lady from Oraro talked about dispute resolution, and I think it's also very important for us to know how to resolve disputes. Famous cases where WhatsApp emojis have been used as consents to a contract. Do we understand and appreciate how these things play around? Many times we have different emojis or different social media or digital platforms which are used every day but can lead to disputes or legal disputes in the future. So for the legalese, you need to understand contract negotiation, user agreements, terms and conditions, loan agreements for digital lenders, and dispute resolution. Now, my personal favorite is where people usually turn the blind eye. I said as a lawyer, you're not going to cut it just being a lawyer for business. You need to actually understand the business. So you can't cover your eyes, your ears, your mouth and say, my role is to lawyer, but you need to understand what falls into these digital platforms. One of them is intellectual property. There's a lot of innovation in digital spaces. Everyone keeps on innovating. If you look at sandboxes, the try and error, there's a lot of research and development, and there's a lot of innovation that happens there. So how do you protect that development that has happened? Is it trade secrets? Is it a trademark? Is it a copyright? Is it patentable? What type of IP is it? You need to appreciate and understand how to protect it on a worldwide scale, because these people are not operating just in a jurisdiction, but they're operating across jurisdictions. How do we protect that IP across the world? You need to be aware of that particular situation. The other is structuring of the business and the formations. People have virtual offices, people have neobanks, they have mobile money, offsite workings. They don't have physically be in places, but they want to operate in different jurisdictions and also take benefit of the tax and structures that happen legally. So you need to understand, how do I structure client business in this digital space to operate a digital business, making the most of the structures legally and tax for tax efficiency. You need to be able to understand that and be able to play in such spaces. Corporate governance as well plays a big role. You should, as a lawyer, know the principles that guide corporate governance, and these, I must say, that are the ones you hold dear, like a Bible or Quran, as you advise the different businesses. So digital assets or digital businesses call for more corporate governance, because remember, there's a lot of user interface. Sometimes a child can come and access your website and access certain information. How do we govern or how do we manage stakeholder engagements to avert the risks of dispute resolution that come along? So you need to understand the basic principles of corporate governance to be able to advise the different businesses you or clients you represent. I'll give an outlook on East Africa. In Uganda, I think this is just repeating what everyone has said. We've had the national payments for mobile money compliance. In Kenya, they've regulated digital lending, shut down predatory lenders. Rwanda, I think they talked about the sandbox for AI and blockchain innovation. Burundi, they're strengthening anti-money laundering and KYC compliance and digital banking. So you can see that East Africa is taking steps, all leaps and bounds, and on making sure that the digital economy does not affect business as we know it. I think Louis has said it, that we need to look at innovation a little bit more, so that we are not playing catch up in most of the time. But sometimes you have to look at these things that you don't understand more critically, so that you can be able to govern or to regulate them better. A few tidbits, what I think we should remember, not to forget. One, in fintech, innovation moves fast, but legal compliance must move faster. So these people who innovate are always thinking on how best we can move to the next thing. But you as a lawyer should move faster on how best they can comply with the legalese that's around. Then two, every line of fintech code needs a line of legal thinking behind it. Again, I'm getting deeper into coding and things like that, but these are things that you need to think about as a lawyer, that everyone who does coding needs a lawyer to protect him from that code that he's actually trying to develop. What algorithm be going to be used? Are we going to be mining data we shouldn't be mining? They should be understanding the legalese around that. Then where fintech meets regulations, lawyers become the translators between code and compliance. Again, self-explanatory, you need to understand what code is being used for this machine learning, for this AI, for this payment platform, for this payment aggregator, and what is the law around it with the compliance requirements, so that I can be able to advise my client on how best to move along with that particular business. This is my second last slide, and I said I'll try to be as quick as possible. These are personal favorite quotes. One, your interaction with fintech and AI will determine your ability to survive as a legal practitioner. And I'll relate that to the second quote, which says, AI is not taking or replacing anyone's job, but it will take the jobs of those who refuse to adopt to AI. What this means is that as a lawyer, many of us think these machines are going to come and take up our jobs. They're actually not going to take up your jobs, because human interaction is paramount on every transaction. But if you do not learn how to interact with that AI, or to have your work interact with that AI, then you should be worried about your job. Otherwise, you should be good to go. Thank you for listening. I want to pass it back to the moderator, and I'm happy to take any questions. Thank you.
Okay, thank you, Ian. That was quite fast, and we have exactly 9 minutes to close this session. I'll take the questions that I've received in the Q&A, and then I see Louis has a hand up. I don't know if it's an old hand or new, but just before I get to that, I'll take one question in the Q&A. And this is for you, Winnie. The question is, how is crypto regulated by regulators outside Africa?
Thank you, Rachel. Sorry, I'd turned off my camera. I would say maybe I'll outside Africa, inside Africa, maybe I can just give a general view that in more advanced, and developed markets, there certainly is good regulation in place. A couple of countries have either, established specific regulation, generally dealing with cryptocurrency, digital assets, or they're having active engagements around that. The one where, you can say it's a touch and go is around stable coins, because those perhaps there's certain complexity to those ones. So those, I would say maybe another few months, and then we'll see regulation in place. But overall, when you see, when you look at, say, anti-money laundering or issues of consumer protection, you expect that there is a parity in regulation, or there are similar issues that cut across. We are not seeing that for cryptocurrencies, digital assets. Everyone is kind of developing their framework. Either it's too complex, or if it works in one country, it's not going to be operationalized in another country because of this or the other. So I think it's a growing a trend, perhaps, and something to watch around that regulatory framework. I know many people are still taking the view that there should be no regulation, or at least it should be a light touch regulation. But until, maybe the leaders, as we always see in terms of regulatory framework, provide some guidance around that, I think everyone is going to try and do what works in their market. Yeah, thank you. Rachel, you're muted.
I am so sorry. And as I was saying something all this time, yes, thank you very much, Winnie, for this. And I was saying that indeed, as you said, when it comes to crypto, because it's evolving, you'll find that every jurisdiction has its own regulation. So you'll find that the US has its own regulation for crypto under the CSC. You'll find that the Europeans also have a different kind of regulation. So it varies really depending on the jurisdiction. The UK has a different regulation. China has a different regulation. I think under its crypto trading and mining ban or something like that. Yeah, and I think there's some that are under development. So this varies from jurisdiction to jurisdiction. So thank you so much, Winnie. Louis, your hand is up again.
There is, hello,
I think
can
it's
you
the
hear
last
me?
question. Yes, I can hear you.
I want to come back, but as Ian was presenting, something came to my memory was jolted a bit. I should bring to the concern of lawyers in East Africa that there is a common threat we are facing, because we have failed to sign up to I think there is something called the African Cybersecurity and Data Protection Convention. Only Rwanda, I think, has signed up to it. All the other 6, 7 East African countries have not. But the consequences of this are these. One practical thing that we're facing in much of the East African region is the money lending, the digital money lenders, or they call them the money lending apps. So many of these apps are collecting our personal data, and this is the problem now. They are selling a lot of that personal data via the dark web. Now, it goes back to what I was saying earlier. If as lawyers we don't push our regulators to sign such conventions and have uniform ways of pushing for, because if you look at Uganda is a very small market to even go after these money lending apps, because most of these money lending apps are coming from China, actually, though they have Africans behind them, but they're Chinese people and they are escaping from China because China has strict capital controls. Now, the reason why the EU can push back against Google, okay, before we go even to the Facebooks and the Googles, they can push back against the full Facebooks and the Googles, it's because the EU is a big market, 500 million people. Now, a market of 48 million people, 48 million, and of which less than 3 million have regular access to internet. It's a problem. So what I'm thinking, and the solution should be, we should push so that we have a cause. If East Africa is to have a uniform, let us say, a body of data protection regulators, if we are to push back, then this population is a very big population that cannot be ignored. But if Uganda is going to go at it alone, because the consequences of this is we're going to have social engineering that is a result of identity thefts. I have friends whose identities are being sold in the dark web, and some Nigerian assumes the identity and opens up a bank account in Kenya. And before you know it, Interpol has issued some sort of notice, this person. So the only way we can push against that, the laws are there, I'm not saying they're not there, but we cannot use our laws because we are a small market to protect ourselves. So I think we need a bigger umbrella, and that umbrella needs to be coordinated by signing up to normal conventions like the Africa Cybersecurity and Data Protection Convention. And then we have a way of fighting against, because if you look at most of our domestic laws, selling personal data is illegal, but we can't enforce against even the illegal money lending apps. If you're trying to Google and you tell them to list these apps, they can ignore you. But if we have an agency that is not an agency, but some sort of synergy between all the East African countries, then I think that, because that's an impending risk. So we have very many identity thefts that are coming from that area of data sold by the dark web. Google can't do it, but these unconscionable money lending apps can do it, and they are doing it. And a lot of people are losing their identities, and most of this data may not be relied on by banks to open up, even our accounts here, because it might be flagged off somewhere, maybe in a credit reference bureau in Kenya. So I'm thinking that as the East African Law Society, we can push maybe the different regulators to unite, have one umbrella, and then we push back on such emerging challenges that we're not really focusing on as much. Thank you.
Thank you very much, Louis, for this contribution again. I actually wanted to just get to my panelists to give us their parting shots, but I think in a way you've also given us a good summary. And I see we only have 1 minute to close. So I'll just request each of our speakers still not to deny them the chance. I know we started exactly 4 minutes past. I'll allow each one of them to take 1 minute, give us their parting shots, and then we'll close it. Thank you. So I'll start with Ian. You're just the last speaker. So I'll start with you, and then we'll go to the rest of our speakers. Thank you.
Thank you, Rachel. I will say this last. AI is our friend. Digital platforms are our friends. Let us, as lawyers, try to learn, to embrace them, to use them, so that we can be able to advise our clients better. Thank you.
Okay, thank you, Ian. And I think so we have agenda balance. I'll go to Winnie next and then come back to David. Yes, Winnie, what are your parting shots for us?
Thank you, Rachel. I guess mine is whether to regulators or the people on the call is we need to embrace, similar to Ian, changes there, technologies here with us to stay. What we need to do is understand it, embrace it. For the regulators, embrace regulation that changes with the landscape, obviously, but that also balances the rewards for consumers and still ensures that a business burden is not imposed on service providers. Thank you.
All right, thank you, Winnie. David?
Yeah, thank you, Rachel. What I can say is that with the legal challenges on the fintech market, it is our opportunity to serve, identify those challenges, engage with our regulators so that our clients who may be fintech service providers or the consumers are protected. Thank you.
Thank you, David, for that. Anne, and lastly to you. You're muted, we can't hear you.
Sorry. Yes, thank you. Thank you, Rachel. My parting shot is that we must learn, or in terms of regulation, there is a very delicate balance between us invoking or sparking or encouraging innovation vis-a-vis regulation, because too much, of course, will stifle, and too little will open up the space to a lot of dysfunctionality. Fraud, data breaches, all those things we've discussed. So as in the legal space, I think it is our duty to stay ahead and abreast with these regulatory frameworks to be able to advise our clients on how to navigate this space well. So it's about knowing. That is the only way we can be able to navigate this space. Thank you.
Thank you very much, Anne. And I think as I also close this session, I think it's very clear from this session that fintech and instant transactions are reshaping international business, of course, as it is. And these are the clients we advise from time to time. We must evolve because we have no reason not to change or to adapt or adopt. So we have to make sure that we are doing so much with ourselves to be better advisors. However, with all these, there's of course complexities that it comes with. As reading an article recently on Nexology, where they're saying that, of course, with every system, just like human beings, there are flaws or they are fallible. So we have to ensure that we find aspects to mitigate those risks that might remain also critically challenging. And we must stay agile as legal professionals. Let's be proactive. And as a call for action or as a recommendation from some of our members in the audience, we have to take them seriously and see where we can come in to make things better. Thank you very much. Very huge thank you to all our esteemed panelists for making the time, for sharing their insights and experiences. And to our engaged audience, thank you so much for your participation and patience, and for participating in conversations like these that are going to help us shape the future of fintech and international business. Let's continue the dialogue beyond this. And thank you once again. Have a great evening. It's exactly 4 minutes past 4, which is exactly 2 hours. I'm glad we kept the time. So thank you and have a great day or evening, wherever you are. Thank you very much. Thank you. I've brought our session to a close. Thank you. Thank you.
Thank you, Rachel.
All right, thank you.